Jonathan, one would hope that the shares of the big catering companies would be like the food that they serve. Boring, but consistent and reasonably nutritious. Sodexo has reported results. Are they living up to that standard?
So far this year, yes, they are. Their financial year ends in September, so this is their first kind of fiscal quarter of this year. And they've received an enormous boost courtesy of the Rugby World Cup, to which they were the official catering supplier. So that has kind of racked up the revenues for the first quarter of this year. The question remains, though, about what happens in the other three quarters, because obviously that was a one-off event, and there are some problems elsewhere.
Let's start with the basics. Is there any kind of growth story in catering, or are people just eating their fries and eating, filling up from the salad bar, and it grows at the pace of GDP?
It grows at the pace of GDP plus a bit, I would say, because there's a structural story there. More people, the private sector's been into outsourcing for many, many years, but of course it's spreading to the public sector now, particularly actually here in the UK, which is ahead of the rest of Europe in contracting out essential services like feeding prisoners, for instance.
There's a grim image. So they've had a good quarter. There's a structural growth story. I'm very happy so far, especially in a somewhat unsettled world economy where I'm going to be looking for a defensive name. Are there any drawbacks here?
Well, there are two. One is that the shares are quite highly rated. They're on about 19 times sort of forecast profits.
So we're late to the story.
I think it's more that that investors, as you say, in a very sort of turbulent world, are willing to pay high multiples for consistent and reliable growth and big cash generation. And that's the other problem, really, that in the past, on a few occasions, Sodexo has been a little inconsistent with its guidance, with hitting guidance, particularly sales, and its profit margins are not as high as those of Compass, which is its big UK-based rival.
So the story here is that we need to see greater consistency in execution before we take our plastic trays and pile them high with the shares. Is that about right?
That's about right. And there are encouraging signs that will come through. They are winning more contracts in the UK. They're winning more corporate contracts in the US. They're getting help from the strong dollar and the stronger pound versus the euro. But they are also exposed quite heavily to Latin America, a region which is not doing so well at the moment. And they also provide a lot of catering services for the oil and gas and mining sectors. And of course, those are particularly tricky areas of business at the moment.
All right. It does, despite those drawbacks, sound like a solid defensive story. Thanks, Jonathan.